Alright, what is up, dudes to this? Let's talk about MMAT today, and let's make it short and simple and interesting, right? So last night I said if we have twice the amount of volume, we are going back to $7.2. But apparently we don't have enough volume to support that, which is normal. You know, stock. It's like when you've traded stock for over 5 years, you realize that a lot of times it doesn't really matter, you know, whether your price target is right or wrong, because the stock market is very fluid. So no matter how great you are at picking your stock or how great you are at exiting or buying your stock, at the end of the day, the stock is just like the weather. They have to do what it is. We can, you know, we can sort of like, not really predict, we can drive a lot of possibilities by looking at the stock. Oh, okay, so we don't have a cloud eye today, so then that means there's probably not going to be a hurricane. Or, you know, if you know, 99% of California's weather on a how much, you know, statistical range or indication that it's just going to be sunny for the next day, then hey, we're 80% confident that's going to go that way, right? So for MMAT, it's the same thing. We already know that, you know, if it has 2x the volume, then it's going to go back to 7.2. So now we have a volume that's lower than yesterday. And, you know, yesterday and the day before yesterday, it has a, what is this, 20% increase? Let's do the math here because I haven't really looked at this. That's 5.2. Yeah, you have a 15% increase. So usually, what's the average increase in the stock market in sort of a small cap stock? 5%, 3%, 1.2%, somewhere around there, right? If you do a normal distribution of that, and you'll realize, okay, 15% is still an outlier. Depending on how frequent it goes up by 15%, you know, it's basically a liquidity battle, right? So in order for it to stay at 15% range, the day after, you know, the 15% increase volume has to be either the same or just slightly lower, and everything has to be on the buying side, which it happens, right? But the problem then becomes, okay, on the third day, it has to stabilize it at, in this case, it's $6. It has to have at least the same amount of volume as the first day, or it has to be exceeding the same amount of volume, and it has to be more of the buying volume. And guess what? Today we have more selling, more volume, and people are buying more puts than calls. So what's going to happen? Then it's just probably going to drop. And I've told you on the previous video that there's a deadlock on 6.39. If it cannot stabilize at 6.39, then it's not going to go into 7.2. Alright, what did I do today? Well, I actually stick to my guns, and I hope, you know, the entire retail flow is actually going to do the same thing and start loading up some $7 calls. And guess what? It went down. So what? I eat away my 12%, you know, option holding value. But tomorrow I can do something interesting with it. I can sell all of those $7 calls because apparently a lot of you, apparently the market isn't having a lot of faith in the stock. Or it's just the cult following is swaying a little bit, right? Or we can actually go and look at the short volume today. Oh, interesting. I actually don't want Google Dark, but why not? If you go back and look at the short volume today, by the end of the market close, it seems like nobody is shorting it at 5.71. But the short volume is probably going to be over around 50%, my guess is. And it's going to be exceeding the day before's volume. Yeah, there you go, 53%, heavily shorted. See, you now have a cycle. You have a pattern to pick up. Also, when I say it's going to go to some price, I didn't say it's just going to go to the next day. You guys are so entitled, and, you know, so I don't know how to describe it. It almost feels like, oh my god, everything's just going to happen tomorrow. It's never going to happen tomorrow. I mean, $7 price target for a monthly sort of thing, if everything is positive and if George doesn't do anything stupid, or, you know, they start going to have good press and talking about roll to roll, even though we both know that their patents are old, it's going to be good press for them, and $7 is not a hefty target to have. Even though in a yearly sort of option thing, it's not really $7 is the consensus, the market consensus, but I will post that video on Patreon about the yearly projection for this stock. But again, this is literally a swing trader's heaven and a sort of like a if you're an option trader who plays IV a lot, then this is a really great choice. Like right now you have the IV exactly on the short side, then maybe load up some. I talked about this on the Patreon content today. I think I'm just gonna post that first and then post this one. When it reaches a certain price, $5 call becomes super attractive. You buy that, rinse and repeat, right? It will stay in the range that I gave to you. I did give to you a really good range. And some of you in the comment section picked up that range, and you can form your own decision within that range. Right now, I'm sort of like a little bit over the phase of trying to play, the very small cap stock and sort of like doing a buy and hold and doing option and doing crosses and spreads. I'm over that a little bit. Right now, sort of playing the big boys a little bit, TQQQ, SPY, betting on blue chip stocks rather than the small cap stocks, because in terms of like a general strategy, you will realize that yesterday I told you guys, right? The upside is 15%, and then the downside is negative 22%. Why would you invest in a stock that have a bigger downside than an upside? Like, why? Right? Like, at the end of the day, it's just all logic. If you look at PFE, my downside is only 2.3%. My upside is twice the amount of my upside is literally 100%. Well, in a very long term, but let's just, for the sake of calculation, what's my upside? My upside is almost 10%. You have a less than 2% downside with a 10% upside. Why would I pick MMAT over Pfizer? Why would I? Right? I mean, the argument is, okay, I only need $100 to buy a $7 call when, this morning, but I need about $200 to bet on PFE. But again, like, it's all about risk and reward analysis, right? Or another argument, another stock we were talking about on Patreon is PLL. In Discord last night, sort of like a last minute sort of thing, because my information came in a little bit late. We know that it's going to go up today, or more likely it's going to go up. Then isn't it better to divert your fund from MMAT to PFE if PFE is more likely to go up? Instead, when you're betting on actually average, think about it, plus 15% upside, negative 22%, a consolidated, evenly weighted general, expected value is you have a negative 7% range. No? And when you have a negative 7% range, and then guess what? What did we do today? Today's stock went down by 8%. The prediction is still right. I give you all the information you need to know. I mean, again, we're not financial advisors. We don't give financial advice. Everything we say on this channel is for shits and giggles. You have to make your own financial decision, right? I mean, of course, if it's great, it went up by 15%. But what's your stop losses? You can have a stop loss of 22%. Your stop loss is probably some of the 5%, 7%. Somebody is 9%. Any stop loss that's lower than 10% is just dumb. Or higher than 10%, like 11%. This is just dumb, okay? Because mathematically speaking, you know what? I will make another video about stop losses. This is just like trying to help you guys becoming more and more rational. You can't just, okay, there are 3 different type of person that invest in MMAT. You have the diehard fans, and you have the people who are just speculators. They actually don't really care if they actually don't really believe in the tech or whatever. They're just trying to make some money. And you have a third one is, being spectacle and actually trying to figuring out whether they wanted to be bull or bear based on their own opinion. Can you guarantee either of those make money? No, you can't. It still follows the general bell curve. But who makes money is the one who makes the best decision based on the information that we're given. I give you the upside range, I give you the downside range. You can do the expected value, which I also give it to you, because you just need to plus them together with the even rate. You get a negative 7% possibility of the expected value, and just happen that the market decided to take the more rational route. And I'm not the only smart person on the market. I mean, there are a lot of hedge funds that didn't short that day, didn't short on this day. I mean, they're adapting on all of those small meme stocks, right? They actually short on the volume third day, because if the third day the volume went up to twice the amount, then they will just buy in. They will buy in at this position. You guys will go, oh my god, it's so expensive. No, it's not. Because when you have a third day volume that's bigger than the other day, then you will probably most likely to have a 5-day runner up. Anyways, you guys probably will still shit on this video anyways, but hey, I'm posting it for the people who want to learn and for the bigger YouTube community, but also just for a record for myself to sort of like document what I learned on the market. So it's never about you guys. It's always about me. I'm just joking. All right, see you guys on the upside.